We set a plan to pay off the school shifts and have seen it through. With Minnesota's economy continuing to outperform the United States, our revenues are growing and allowing us to completely pay back our statutory IOUs and still have a projected $825 million balance by the end of June 2015. Now, this forecast shouldn't be mistaken for money in the bank. We're still only in the 5th month of a 2-year budget. But one thing is clear. With this forecast, we will have completely paid back our school shifts and replenished our reserves. With me to explain this forecast is State Economist Laura Kalambokidis and State Budget Director Margaret Kelly. I'm Jim Schowalter, Commissioner of MMB. As usual, you can get a quick snapshot of what is in this forecast from a one-page at-a-glance document that you should have. You should also have the slides that we're going to be using for today. The complete budget, the complete forecast book is online with some small changes to it, but the usual thorough analysis of the state economy, budget issues should all be there. The other thing I want you just to know is that one slight formatting change is that some of the comparisons you're going to see are to the October number, and that's just shorthand for end of session plus the special session that occurred, plus the statutory repayment or sort of set aside of the FY13 money to pay down the school shift. So it's essentially an end of session with those two things. Makes our charts much simpler. The improved year-end balance from fiscal year 13 that was announced at the end of September really is at the start of this forecast story. As you'll see on the first chart, the beginning balance of $1.7 billion is an aggregation of the reserves plus that year-end balance plus some carry forward. That got us off to a good start, which is the starting point for the forecast narrative this time around. What you'll find is that the revenues have improved by $787 million, and spending has decreased by $247 million. While on a percentage term, these aren't very big swings, they accumulate and give us an opportunity to repay the remaining property tax recognition shift, as well as the last of our statutory obligations, $15 million for the airports fund. That still leaves an estimated $825 million by the end of June 2015. It does also conclude a long period of repaying those shifts and replenishing our reserves. There's a chart later on in the document that I'll touch on as we go through it. But I think I want to turn it over to Dr. Kalambokidis to talk about the underlying economic question of what's happening in the nation as well as Minnesota. Laura.
Thank you. So as the Commissioner said, I'm going to tell you a few things about the U.S. economic outlook and move on to some specifics about Minnesota's economy and then talk about give you the revenue story. So the U.S. economy has continued to grow at a modest pace in 2013. What you can see from this chart, this is the U.S. real GDP growth forecast done by Global Insight, which is Minnesota's macroeconomic consultant. And the 2013 expectation is for 1.7% real GDP growth, and that's continued growth despite the federal budget cuts known as sequestration, and despite the federal government's failure to reach an agreement on an FY14 budget, which led, of course, to the shutdown that we saw during this fall. So many macroeconomic forecasters, including Global Insight, have given that information about the federal short-term fiscal situation and continuing policy uncertainty, agree that these things have taken a toll on consumer and business confidence, and that lower confidence in turn has dampened spending, investment, and hiring in the United States in 2013. Consequently, the forecast for U.S. economic growth has slightly weakened since Minnesota's last forecast was presented in February. And so that's what you see where the blue bars are below the gray bars for 2013, 14, and 15. That's that slight weakening in Global Insight's forecast for those years since February. The gray bars are the February expectations. In the horizon for our planning estimates, 2016 and 2017, Global Insight has increased their growth expectations since February. Despite the slightly weaker outlook and short-term challenges, where the short-term challenge is primarily that federal fiscal policy uncertainty that remains, the lingering uncertainty, where the federal government now has these additional deadlines in January 2014 for resolving their short-term fiscal challenges. Despite that lingering uncertainty, Global Insight believes that once that uncertainty and these short-term challenges are behind us, that the fundamentals for solid growth in the U.S. economy are in place, and that acceleration should occur in 2014. That acceleration is expected to be led by an upturn in consumer spending, improved housing, improved equipment investment, and that's in addition to the easing of federal fiscal drag. Recent positive, albeit preliminary, reports confirm that expectation. And we talk a lot about the U.S. fiscal situation in a briefing like this, but it's important to pay attention to the fact that Minnesota tax revenues do not march lockstep with the U.S. real GDP forecast. So there's a lot of steps between there and where we're headed with regard to revenues. It can be the case that in a year where U.S. real GDP grows relatively modestly, state tax revenues can grow fairly well. 2012 is an example of that. So before I get to the revenue story, let me talk about the link between the U.S. economic story and Minnesota's revenue story, and that's Minnesota's economy. Minnesota's economy continues to make solid gains, and in some ways is outperforming U.S. averages. The chart here is simply Minnesota total non-farm employment. It's just levels. It's not a change. The dark line is actuals, and the dotted line is our forecast from our Minnesota economic model. What you can see from this is that you can see the peak of our employment levels around 2008 before the recession hit, and then you can see the trough during the recession, and you can see that where the dark line ends is that Minnesota has recovered the jobs lost during the recession. These gains have been occurring across every major industry with the exception of manufacturing and federal government employment. And that broad-based economic recovery has helped Minnesota return from recession conditions faster than the nation. It's still the case that in the nation we have not yet recovered the jobs lost. Some additional positive information about Minnesota's economy showing strength is that our unemployment rate has fallen. It typically runs below the U.S. rate, but now that gap between the U.S. rate and Minnesota's rate is larger than it usually is. In addition to the lower unemployment rate, a very encouraging sign for Minnesota's labor market is that first-time claims for jobless benefits have fallen to levels not observed in more than a decade. And other leading labor market indicators, so indicators that suggest improvement in the labor market, are also looking strong. I'll move on to an indicator that directly affects our forecast, and that is that preliminary income tax withholding collections during the first 10 months of 2013 suggest that Minnesota's growth in wage and salary income is outperforming previous expectations, so the expectations that were in place during the February forecast. So in this forecast, we expect wage income to rise 4.2% in 2013 compared to 2.1% expected in February. So this does move us to the revenue story. The stronger employment and income growth in 2013 that I've just talked about have contributed to forecast revenue. Tax revenues for fiscal year 2014-15 are projected to be $824 million, or 2.2%, more than the February estimate, having adjusted that estimate for tax law changes, per the explanation the Commissioner gave. The difference, including transfers and all other revenue, the bottom line here is that $787 million forecast change for fiscal year 2014-15. Now, again, we're early in the biennium. The biennium just began in the middle of this calendar year. We've seen 4 months of actual collections on this biennium, so that's only, we still have about 85% of total collections for the biennium outstanding. A lot can happen between now and the end. Higher income and corporate tax estimates are the source of 95% of the increase in tax revenue. The individual income tax, as you can see, had the largest dollar amount change. That was a 2.6% increase over earlier estimates, and the corporate income tax had a 10.5% increase. The change in the income tax estimate or forecast since February is primarily due to an increase in our estimate of tax liability for 2012. So the income tax base year is 2012. We don't yet know what liability is for 2012, but our estimate for that has increased, and the forecast is affected both by that change and also increased growth projections for some underlying income types, including the wages and salaries that I just talked about. 2012 liability we now estimate to be $165 million higher than what was projected in February. We have also increased expectations or our assumptions about some types of income in 2012 in order to explain that higher liability, including capital gains and business income. Some of those increases in business income, some of those carry forward to later years. And again, the wage and salary income increased assumption also influenced our income tax forecast. The increase in projected corporate tax revenues reflects increased expectations for corporate profits. Corporate profits are running quite high, and Global Insight's forecast between February and November for corporate profits changed from a relatively flat expectation to growth of between 4% and 5% per year. The change in expected sales tax revenue arises partly from technical adjustments and partly from changes, again, in some of those expectations of spending items in Global Insight's forecast. So to see the bigger picture of this forecast and to recall something that the Commissioner said, recall that we ended fiscal year 2013 with total revenues $582 million more than forecast. So we saw that happened at the end of the fiscal year. That informed our estimate of tax liability for 2012, the base year of this forecast. We also know that 2012 is a year into which some taxpayers shifted income out of 13 and into 12 in response or in anticipation of federal tax increases. And so the subsequent changes in forecast changes in subsequent years, 2014 and 15, are not the same as that, that $582 million. But we do project forecast increases in each of the years of the biennium, and that results in the $787 million increase you see over the entire biennium. On the next slide, I list some of the risks to the forecast. One being the fact that we're early in the biennium and there's a lot yet to happen. The Global Insight names as one of the risks, the short-term risks to their own forecast are these federal fiscal policy uncertainties. So if things don't go as they expect there, that will change things. The impact on Minnesota's economy from that uncertainty, though, is primarily through what happens in the U.S. economy. Federal Reserve is going to take action in the coming year. They are expected to begin to end their extraordinary bond purchases, the so-called tapering. Global Insight expects that to begin and end in 2014, but there's uncertainty about when exactly that's going to happen, what the impact is going to be on interest rates, and what the interest rate effect is going to do to industries that are dependent on interest rates, in particular the construction industry. I talked a bit about the risk slide.
It's in the slide deck.
Oh, I'm sorry. I'm sorry. Thank you. Another risk is income shifting in response to federal taxes. I talked about some of this shifting occurred, but we will not know until early in 2014 to what extent 2012 income is reported income is how 2012 reported income is allocated among non-wage sources, for instance, capital gains and business income. So at that point, we'll have a better idea of how much money carries forward, so that imposes a risk. And finally, this is the first forecast we've had since the introduction of Minnesota's fourth tax bracket, and that change introduces some challenges to forecasting income tax revenues because income taxes that are paid on non-wage income, which are disproportionately in that fourth bracket, are often paid through estimated tax payments and through additional payments on withholding, and it's hard to foresee how taxpayers are going to time those payments. And so at this point, we are collecting more revenue, we appear to be collecting more revenue from sources that are a bit harder for us to foresee. That's all I have, and I will...
I'm going to speak to the spending side of the story, and I'm going to begin with our spending prior to any shift buybacks. So total spending, $38.8 billion for the 14-15 biennium. That's $247 million lower than previous estimates, and it's just 0.6% change in spending. So relatively minor changes on the spending side of the story. Beginning with K-12 education, the single largest area of state general fund spending, $16 billion, just $10 million lower than previous estimates. There is very little change in our general education appropriations. A small increase in spending from higher pupil growth. This is the first forecast where we're actually seeing growth, pupil growth, as opposed to lower estimates of pupil growth. And that growth estimate is offset by an adjustment in the forecast model, so relatively little change on the general education side. There is a $10 million lowered spending, primarily driven by a reduction in literacy incentive aid on the categorical aid side of the equation. So very little change in K-12 education. Property tax aids and credits, almost $3 billion, a small part of our general fund budget, so a relatively large change there. $70 million below previous estimates. It's a 2.3% change in spending, more than we usually see in this area. So this change is based on fiscal year 2013 actual spending for property tax refunds, where we saw lower refund values and lower program participation than we had thought we would see. And those changes are being carried forward in the 14, 15, 16, 17 forecasts. And what we are assuming is that the income growth that Dr. Kalambokidis spoke of is outpacing any growth in property values. And so there's not as much use of the property tax refund program. Health and Human Services spending, our second largest area of general fund spending, $11 billion. In 14-15, $117 million decline over previous estimates. It's only a 0.1% decline in spending. We usually see the biggest changes in spending in this area. We are still assuming that we have the same assumptions in this forecast as previous forecasts about the Affordable Care Act and any effect that the individual mandate will have on our medical assistance program. We do not have enough experience yet with how the implementation of that act is going to bear out on our programs, and we will see changes probably in February and again in next November. But with regards to the 117 reduction here, there is one change in enrollment and costs for our Community Alternatives for Disabled Individuals waiver, which is also called the CADI waiver. And this is a waiver for individuals with disabilities to help them stay in their home to avoid going into a more costly facility-based living environment. So a third of the change, $41 million, relates to lower costs for providing services to these individuals, along with a reduction or lowered growth in that program. 3% decline in the growth rate. We're still seeing a 12 to 16% growth in that program over the forecast period. About a quarter of the $117 million is due to reduction in the state's share of the Medicare Part D prescription drug program. When this program was enacted at the federal level, they asked states to participate in the cost of that program, since states had been paying for prescription drugs in their MA program for people who were dually eligible. It's also called the Medicare Part D clawback. And we are seeing lower expenditures in this area based on the greater use of generic drugs compared to brand name drugs. And so because more people are using generic drugs, we're seeing a reduction in the state's share of that program. And the balance of the reduction here, about $50 million, is from recognizing for the first time in our forecast federal revenues resulting from a 2008 law change that was a federal waiver that became approved in fiscal year 2012. And so we are now tracking the federal revenues for an increased rate to governmentally owned hospitals. Moving on to debt service, only $1.2 billion and about $28 million of lowered spending in this area. There's a lot that goes into a debt service forecast. This is the cost of our existing debt that we have already issued. And we are assuming that our costs are going to be lowered for a variety of reasons. Premiums that are paid at the time that debt is sold are now being applied towards the size of a bond sale. Repayments of other loans are coming in faster than we thought. Interest earnings on funds sitting there in the account are higher than we had thought. So there's a lot going into the $28 million reduction. And about one-half of the $21 million reduction in the all other area has to do with the sale of bonds for the Vikings Stadium. We are now assuming in this forecast it will occur in January as opposed to August of this past year. And we're assuming that the first bond payment in this fiscal year will be an interest-only payment as opposed to an interest plus principal. And those forecast changes save us $10 million of the $21 million in all other. So when you take the $38 billion and you need to add to it additional new spending that we will be doing because of the shift buybacks, we will fully have paid off the school shift. And we will also repay our statutory obligation to the airports fund, and we'll have $39 billion of spending and only a $13 million change from previous estimates for fiscal year 14-15.
One more slide to go, and that is just looking at how this forecast projects into the next biennium. The improvement that we are looking at in 2014 and 15 carries on into 2016 and 17, as the chart suggests. These numbers are solid, though not spectacular. And the reason I say that is sort of two reasons. One is that obviously, as in the past, the spending numbers don't include any discretionary inflation for them, so while we see a structural balance here, that factor isn't included. The other is simply that there's uncertainty in this forecast, as usual. And the last time we had this kind of budget scenario was more than a decade ago. And while you didn't see any dark, stormy clouds at that point in time, 2 years later, we had a deficit. So these are benchmarks, these are planning estimates, and it's certainly good news that shows we're on the right direction, but I don't want to overplay that too much. As usual, the forecast document does include lots of detail, lots of information, and we'd be happy to drill into any further questions that you might have at this point.
There's a question about the school shift buyback, the property tax recognition shift. Is this forecast all that's needed to trigger action in that regard, or does there have to be some executive order from the governor or the LCMR or some other group to have to say something about this in order for this to happen now?
It's done. It's done. Current law says that upon a positive forecast, we can end. Current law now would say that we make those payments so that the property tax recognition shift is done, aid payment shift is done.
They'll see the catch-up checks starting when?
The aid payment shift is basically parceled out throughout the course of the year, but that was already done when the legislature told us to use the FY13 balance and make a change in October. So that was sort of wrapped up at that point. The property tax recognition shift doesn't get paid out until late in the fiscal year, so that's more like a June payment.
So do you send a check? How does that work?
This is truly an accounting issue of when school districts recognize property tax revenues and how they carry that on their books. It is not so much, and how that then influences our state payments. It's not so much a a regular monthly payment. It's how they recognize and what school fiscal year they allocate those property tax revenues.
Why is Minnesota doing better, Jim? You step outside today, and it's a hell of a good question, I think. Why?
It is. It is a good question. And I think there's a couple of things I can point my finger to. Dr. Kalambokidis can probably go into further detail, but there's, I think, a couple of things that we look at. One is that we have had and continue to enjoy a very mixed economy, and that broad base of activity has really been working for the state. We're seeing all of those sectors do well, and that is helping us outperform many other places. And the other part is just the historical strength of our workforce. We've got good people. And that has been a attractive feature for businesses, and it's I think shown that we can get the job done.
Even construction is now showing positive. That's the one that has been hammered so hard.
It has been. I think the construction numbers are up. It's still not recovered, but it's up.
Commissioner, we heard a little bit about the fourth tier impact, but could you kind of explain the overall impact of all the tax increases from last session on this forecast?
Sure. The question is how last session impacts this forecast, and this is really taking current law and projecting forward. So many of the changes, both in taxes and spending, are really going into effect now. So we don't have a lot of new information about how that's going to affect people's behaviors, how it's going to change things. They were taken into account in these estimates, but really this is more of a commentary on where Minnesota's economy is at, where our performance is at, and what we think that current law trending forward looks like.
Based on some of these economic conditions you guys have talked about and the uncertainties that you pointed to, would you be surprised to see a dramatic swing between now and the more important February forecast?
Dramatic swing is in the eye of the beholder. Certainly, there's always the potential for swings in state revenues in particular. We see more volatility due to the kinds of taxes that we collect and because of the kind of economy we're in right now. So yes, we are counseling that this is just the first of 4 forecasts that will be in this biennium, and that the February forecast will be just as, if not more important, for setting the course for this upcoming legislative session.
How about cigarette tax revenue? It looks like it was lower than forecasted. Are people going over the border to buy cigs?
Not smoking myself, I can't say for sure. We can, Laura, why don't you come in? Certainly, there were some drops in cigarette tax revenues in previous months. That seems to largely have stabilized.
Looking for the number. The cigarette and tobacco tax revenues are forecasted to be $25 million, short of February's estimate, or short of the October estimate. But actually, $21 million of that change is due to larger than expected tribal tobacco refunds. So, given that refund story, it's not clear what if it has anything to do with consumption and where people are buying their cigarettes.
Farm economy, obviously it's a good time. Can you talk about agriculture and farm economy? Is that a driver behind some of the positive numbers?
Yeah, the farm income was certainly up in 2012. 2012 was a record year. 2013, the expectations are that farm income might have a negative, go down from 2012, but 2012 was such a strong year that we still expect a strong year for 2013. And so when we made our adjustments to assumptions about income in 2012, farm income is one of the things that we increased on Minnesota's economy.
Dr. Kalambokidis, previous economists, independent economists, have looked at Minnesota's budget situation and have said our reserves are too small. Would you share that view?
I'm focusing on estimating the revenues and forecasting the revenues going forward, and not necessarily what's going to be done with the revenues.
There's been a discussion in the past. There was some concern from the former state economist about the sort of compression of wages, and there was concern that the wages weren't growing like people might prefer, but they seem to be growing in this next forecast. Do you have a sense of why that is?
The wage growth that I talked about is aggregate wage growth. So it's not saying that per worker wages are going up. So I'm not prepared to say that there's a disconnect between what was being talked about before and what we have now.
Kind of another question just about housing. It looks like in the report you're saying that if the housing sector doesn't continue to stay strong, then that could really have a bearing on the state economy. Could you talk a little bit about that?
Yeah, that's right, and that's true both for the U.S. and for the state economy. So, housing is feeding into the national economy and the state economy in a couple of different ways. That when the values of homes increase, people tend to spend more, and so it can trigger some consumer spending. Also, the tightness in the existing home market and high prices in the existing home market can increase demand for new homes, so that increases construction. But generally, when the economy improves, people's jobs improve and their incomes improve, then we have more of what's called household formation. So we have more of people, younger people being willing, starting families, deciding to move out of their parents' homes and starting homes. And so all of those things kind of work together to help improve the economy from a variety of directions. So if that takes off, that's going to be positive. If that stalls, then it's going to have a negative impact.
Based on this budget, what size of a bonding bill, outer limits, would this support?
The bonding bill is a good question. There's going to be a separate document on our website talking about debt capacity. Built into this forecast is a 10-year rolling average of 775. Beyond that, we certainly have space within the guidelines to do different sized bonding bills. I think that's going to be another question. I want to just reverse it real quickly back to Lori's question as well, because certainly one of the best ways to not go back to the school payment shifts in the future, in some other future bad time, is to have bigger reserves.
Can you talk in more detail about the stadium reserve line? I think it's either 18 million or 19 million. I know the one-time cigarette money was going to go, I don't know if that's gone in there yet, but what's behind it looks like it's $9 million lower than you thought.
There's a couple of things going on with the stadium reserve, and that's only sort of a small portion of the stadium financing picture, which is really starting to come into more clarity. The first thing is that this forecast significantly reduces future estimated growth for pull-tab gambling. So that number is coming down significantly, even as alternative revenue sources from last legislative session, the corporate revenues, are coming back in. So that's sort of the net result, along with the changes in timing of when some of these dollars go out. As you know, the agreement between the authority and the Vikings just got concluded the other week. So our financing schedule has been pushed back into January, and you take all those things together and you come up with a stadium reserve calculation. There's some discussion of that in more detail in the forecast document.
Commissioner, a lot of interest groups will see that $825 million budget balance and start drooling. What's your recommendation to them about what their expectations should be?
I would proceed with caution. This is a great place to be, but we know that we're very early in the biennium. We know that there are a lot of uncertainties out there, and we want to make sure that any changes that we do make are sustainable, whether they're tax changes or spending changes. And that's going to require consistent fiscal management that's gotten us to this place of repaying the shifts, replenishing our reserves.
Any evidence that corporations are using the safe harbor and paying more up front, and that could come back to haunt us, paying more of their tax estimate?
Certainly I don't know if there's any tax type that's more volatile than the corporate taxes. I don't think we have any particular evidence on that, but certainly corporate changes from forecast to forecast, year to year, can change substantially. This forecast does anticipate growth in corporate income taxes, both at the state and the national level, but or corporate income, but that can absolutely vary over time.
Minnesota has historically had very volatile revenues. Is it fair to characterize this as another illustration of that volatility, a swing this large?
You know, on a percentage basis, the spending change is just a couple of tenths of percent. Right? It's like 0.6%. The revenue change is 2%. So I think the magnitude of the changes that can happen in the economy and how they come through our revenue and spending systems is what we don't always appreciate. So is it more volatile? Maybe. Do we need to plan for it and have tools to deal with that volatility? Absolutely.
Sounds like you've got a recommendation in mind for what the reserves maybe should be. I mean, have you shared that? Could you share that?
No. There's no. We're still trying to sort of explain the forecast. Still working through, I think, the progress that we've made in repaying the shifts, getting to a place where we're not trying to play catch up in this upcoming legislative session. That's just a great place to be. You go back to a study, I think like 5 years ago, Budget Trends Commission did take a very detailed look at some of the ways to look at budget reserves and what kind of appropriate sizing would be there. You know, hopefully we'll all look at that in future months. All right. I hear a quick silence.